Marsha, reporting live from the Money Mantra, and we are back with another Forex education video. I created my channel to help as many people as possible become independent and profitable traders. So if that sounds like you are in the right place at the right time. So welcome or welcome back to my channel. If this is your first time here, make sure that you go through my playlist because I have tons of videos, almost 400 quick videos that's going to help you get introduced to trading or become a better trader. Now, if you like my style of teaching and you don't find what you're looking for, you can just leave me a comment down below and I will add your video suggestion to the queue. But I do appreciate all of the support. If you make it to the end of this video and you find that it's helpful, please just give it a like, leave me a comment, and if you feel compelled, just go ahead and subscribe. Now, in today's quick video, it's going to be a trade breakdown. This is just reviewing one of the trades that I share within my community. Every single week, I try to post a couple of trades there just so that people can earn while they're learning at the same time. Sometimes they go good, sometimes they don't, but I do like to just review and let you guys know how that trade played out. So today we're going to be talking about this Euro USD trade. It was also posted on TradingView because sometimes I post on TradingView. I try to post on Mondays, so you guys can also follow me there as well if you're not in my trading community to see my ideas. Now, this was for Euro USD. I analyzed it on the hour time frame. I had a couple of different TPs here, all the way up to TP4, and this idea was for sells. That mean I thought that the market was going to go down. And the longer I've been trading, I've just learned to take advantage of the different types of pending orders because the market isn't always where I want it to be when I need it to be there. So pending orders really help me to spot those entries ahead of time and to set those trades in advance so that if the market does ever reach my target, the trade will be triggered. So in this trade, we were looking at sells, specifically sell stops and sell limits. The difference is that let's just say we were looking at the market like it is now, and we suspect that it's going to go down. A sell limit means that we believe price is going to retrace first, and then it's going to come back down. A sell stop means that we believe price is going to drop once it hits a certain level, it's going to trigger and it's going to continue to go down. So I set both of those types of orders. One was at 112770. And the reason why I chose this level was because I can see that it was a previous area of resistance. And those are what you're going to want to use for your sell limits. If you are looking for sell stops, you're just going to want to use previous areas of resistance that have turned into support. And we're actually looking for them to turn into resistance again and for the market to continue that downward trend. Now, I really hope that wasn't confusing. If it was, you can just rewind it and re-listen, or you can watch any of the videos I have on market or pending orders. So the first thing I noticed was that the market was already in a little bit of a selling trend for the last couple of hours. This is the hour time frame. And I noticed that the red candles were continuing to build. For me, that was a reflection that the sellers were picking up momentum in the market. That was my first confirmation for a sell is to notice the red candles and to notice all of that momentum. If we look here, we can see that at first, we had a strong red candle. The market was selling for about 2 hours. And then we can visually see the power is switching in the way of the buyers buy. The blue candles are picking up in size and consistency. Hence, we have this buying motion here. So I thought that the same thing was going to happen for the sells. I thought the energy would continue to pick up and that we would be able to hit these levels. And this is why I have them listed as potential TPs. When I'm looking for a sell, I simply just use these lines to mark up my support and resistance. In this case, we're looking at previous support as our targets. Again, if I'm selling, previous support will be my TPs and a previous high will be my stop loss. Meaning that if the market was to go up, my stop loss would be hit at that previous level. One thing about trading is you should always set your parameters. because you're not going to win every trade no matter how hard you try. So make sure that you do set your stop loss so that if the market turns against you, you know where you're going to get out and you don't lose too much money. And the same thing with take profits. It's nice to be able to secure profits in your trades, especially if the market has been a little bit choppy. Or you can trade like Tom Hugert from The Best Loser Wins. He doesn't like to set TPs. He just likes to trail his stop loss and continue to add to his position as the market continues to go. But let's continue. So we have the rejection here. That is one sign. We have the sellers picking up momentum here. That's two signs for a sell. And if you guys want, when you're doing your own analysis, you can set a little bit of a tally mark and you can count the confirmations you have for buyers and sellers. And the side with the strongest confirmations, you can go ahead and get in. So far we have our two confirmations for a sell. The third thing that I noticed was that there was a gap here in the market that needed to be filled. It was a literal gap. And what you'll notice if you go back and look at your chart, anytime there's a gap in the market, no matter how long it takes, this gap must be filled. So that was the third confirmation I had that the market will come down and revisit this area, at least to fill the gap. And I also notated it here on my chart. One thing I really like about TradingView is they have so many different free tools that you can use to mark up your charts. You don't always need a bunch of indicators, but it is helpful to notate the things that you see because it's going to help you. You're not going to have to remember everything because you can see it right then and there. And then even as the market moves on, if you have access to the replay feature, you can always just go and see exactly what happened and when it happened. That's something I like to do when I'm reviewing my trades. I have almost 150 trade breakdowns on my channel. So if you want to see other trades that I've taken and how they played out, you can just check out that playlist because I'm going to review my trades regardless. Now, so far we had three confirmations for the sell. The only stochastic I've been using lately is this. I meant to say the only indicator that I've been using lately is the stochastic. It's only one indicator, but it tells you so much information about the price and it helps me to make decisions. Now, just to give you guys a quick overview, if you've never heard of the stochastic or if you've never used it, this is how I like to use it. Now you're going to notice that there is a shaded area and there are also two lines and there are dotted lines. And all of these are going to contribute to my analysis. Now, firstly, if you see that the orange line is above the blue line, like we see here, that's usually a time to sell. We can see it here and we can see it here. And we also see that being reflected in the chart. So orange line above the blue is a sell signal. Also, the most obvious one to notice is if the stochastic is facing down, the market is usually going down as well. Just like if the stochastic is going up, right, you will notice that the market will be going up as well. So you want to pay attention to what line is on top. Is it the blue line or the orange line? And you want to pay attention to which direction the stochastic is actually facing. And here I can see I had those strong selling confirmations. Another thing you can use the stochastic for and a part of your analysis is if you look at these dotted lines, these are all significant levels. Now, my favorite time to enter for a sell is usually when the stochastic crosses below the top dotted line or 80%. And I can see here that it was at 67. Here I have my stochastic crossing below 80 again. So everything was pointing to a sell. Now, if you're looking for a buy, you would want to see the stochastic crossing above the bottom line or above 20, like we can see here. And if we look, we'll actually, let's just look at the buy really quickly. We can see we have the stock crossing above 20. We have it facing up and we have the blue line on top. And then we have all of this beautiful buying momentum. So that was a case where it really worked out. We also have the stochastic crossing below 80 here. The orange line is on top and it is facing down. Hence, we have the sell here down to a previous level. So this is typically how I analyze my trades. And for those reasons, I decided to enter the trade for a sell. Again, using those previous lows as my take profits and this previous high as my stop loss. Now we're going to head over to Trading View and I'm going to show you guys how the trade actually played out. Again, this was one of the ideas I posted. This is typically how it will look on TradingView, and I will literally explain why I'm taking this trade the same way that I've just explained it to you guys here, right? Everything I've said is also notated there. Now, in this trade, I'm going to go ahead and hit play. We can see that although the market did start to sell because we entered here, it didn't quite make it down to our take profit. And even though our sell limit was triggered, again, the market never came back down to TP1. And I actually hit stop loss on this trade for 25 pips. So it was 25 or 30 pips because my entry was around 11251 and it hit stop loss around 11273. Yeah, so about 20 or 25 pips. The risk wasn't really too big. Unfortunately, in this trade, I did get caught in this consolidation phase. And instead of the market continuing to sell, as it showed a lot of promise here, it actually turned around and it bought. I mean, we can see that it's still on an up and up at this time. Let's see if we can go even further. Yep. So the market was going up and down for quite some time. A lot of hours passed. This trade was on May 19th. So, oh, look at that, guys. It eventually came down to TP a bunch of days later. So I'm actually glad that you guys are seeing this because it just goes to show that the market will always revisit previous highs and lows. It won't always be when you want or when, like, it literally won't always be when you want it to happen, but it will happen. So I'm not mad about this trade. I followed my process like I usually do. And in this case, it just didn't work out. But the risk wasn't too big. Always make sure you have your stop loss and your take profits. Take advantage of those pending orders and just keep trading, right? If you really want to be a profitable trader, no matter what the losses look like, you just have to keep working on it and see what did you do wrong? What could you have done better? Because there's always room for improvement. But if you made it to the end of this video and you found that it was helpful or you just like my explanation and how I look at the charts, you can just go ahead and hit the subscribe button down below. If you have any questions or you'd like to join my trading community, all the information or ways to do that is down below in my description box. But that's really all I have for you guys today. Until next time, rich friends.